Yo, what's up, everybody? So this is episode 42. Real quick, the main goal just for today, I'm going to introduce you to something I only give my lifetime members. It's something called max profit on your spreadsheet, okay? It's not coming straight off the bat. I'm first going to give you a little summary, as I always do. But episode 42, again, we're going to talk about max profit. It's a special place that I'm asking you to put on your spreadsheet, but we're not there yet. So first, who am I, okay? What do I do? I see demand, I see volume. That's what I share with you. Now, you guys, I need you to trust the process. I need you to trust yourself and do the right things. When I teach you how to average down, you have to follow the rules. Okay, with that said, let's get into it again today because we made more money again. So what do we make money doing? Okay, I want you all to be better at trading, but understand that I know that you are on my platform probably for the alerts. Yes, the rules and lessons teach you to be better traders, but everybody wants the money. Everybody wants the alerts that are profitable. All right. So let's talk about the alerts for this week. This week, 5 alerts. Okay. 3 of them have closed out. 2 are still open and profitable. So 5 for 5 this week. I'm going to give it to you. UVXY, Monday, 33%. Tuesday's alert for UVXY, 52%. Okay. SNRE, which was a position that was struggling, exited out this morning with 25%. I had 4 positions. So that's a lot of gain, 25%, 4 positions. TIGR is open and currently up 50% since the alert. And a new alert when I called the bottom today for STX. Seagate Technologies. I've been talking about it since it was 65 all the way up to 104. I'm waiting for entry. And I finally saw entry today. But let's talk about my alerts. When I talk about transparent trades, these are my trades for my accounts. I trade about 6 different accounts. Now, when I talk about an alert and I asterisk it or put an alert there or a hashtag and I say this is going on the spreadsheet, again, that's the key word. This spreadsheet, when it goes on the spreadsheet, I want that shit to be perfect. If somebody doesn't have money and there are people that follow that only have a few $100s, I need your trades to be perfect if you're going to make money. If not, you're going to suffer. If you enter into the wrong trade with $200, you're in trouble. So I must be flawless. And that's what I ask for. So what do I ask for? $3.49 a week to answer your questions, provide my lessons, provide my alerts, which I just mentioned. I want them to be perfect. I have my transparency trades, but I trade 6 of my own accounts. All right. So let's talk about the alerts. We closed out 3 more positions. We now have 58 wins and 15 losses, 58 victories and 15 losses, 80%. Okay. So now here's my public service announcement to all before we really get into it today. Okay. Remember the rules. We follow the rules. We secure profit. We rinse and repeat. We take the small piles and we turn them into big piles. And when you find yourself in shit, you step out of shit. You don't stay in shit. I mean, these are all very interesting and important lessons to learn. When you find yourself in something bad, you step out. And most importantly, if you don't follow the rules, you're going to feel the pain. So if you're asking, what are these rules? He keeps mentioning, follow the rules. We follow the rules. We secure profit. We repeat. Where are they? They're on my platform. Look below. 349 Trading. This isn't an advertisement. I'm coming to talk about what we trade, how we trade, and why we trade the way we do. Okay? We're all family. This platform that I created, it's a 349 family. We're there to make each other better traders. Everybody has something they add. All right. One woman on the platform took her account, blew it up to $840. I think she hit 46,000 today. 6 weeks in, 6 weeks after blowing up your account, you don't give up on trading. She took the 1,000 or less than 1,000. She's definitely ahead of me. So yes, I call it right now. You're definitely ahead of me. You're at 46,000. You're at least you're a lot ahead of me right now. Okay. All I charge is $3.49 a week. Why? Because I want everybody to join. I want to have 100,000 traders strong that understand how to trade the market, to look for the sales, right? To plan ahead and to secure max profit. So I talk about max profit, and that's what I'm going to share with you. But we're not there yet, okay? We're almost 1,000 people strong in 9 weeks since the platform was started. Somebody asked me, how many people you have in your family? About 1,000 people strong right now. Yeah, it's $3.49 a week. Our retention ratio is like 99%. Once you join, you don't leave. There's value every day. There are lessons every day. There's something new that you're going to learn every day. Okay, so why else do I charge $3.49? Because I know my teachings work. I know it's legit, so I want to prove it to everybody. I want people to join for a month or a week and just try it out. I show you the 1-month chart, how to gauge volume and demand, how to improve your trading skills. Okay, enough. Please, everything we do is organic. So I'm asking everybody that's currently watching this, everybody that's part of my platform, everybody that's going to watch this on replay, just share it. Share it with 2 people. Just 2 individuals. Share it. Be like, this guy talks about trading. Here, he's on fire. He's been on fire for now 7 weeks. I'm going to show you more slides. I show you slides every day. Why do I show slides? Why do I waste time showing slides? Half the time, they're lessons, okay? The other half, they're showing people's returns, people's profit, people that say, I wasn't with you 4 weeks ago and I was getting crushed. Now the way I look at the market changes. All right, so the UVXY, I entered into it twice today. I entered into puts. All right, it went down twice today. I profited twice today. Yesterday, I did the same thing, personal trades. STX, I called the bottom, Seagate Technologies. TIGR was strong, spiked this morning. Romeo had a position. I mentioned Romeo would probably look good today. XL would look good today. And SNRE would look good today. So what did I do? When they spike, you sell. XL, we know it spikes in the morning. I sold half. I'm holding on to half. I wish I had sold it all and bought everything back on the dip. I'm transparent. I would totally go for that rather than what I did. That would have made much more sense. If I had sold TIGR this morning on the spike and bought back on the dip, I would feel so much better. That's what I teach you guys to do, secure profits. Thank goodness I did it with the UVXY because the UVXY was up and down and up and down and up and down. Okay, so I told you guys, we have enough people here now. I told you guys I was going to teach you something new that I only share with lifetime members. And there are other secrets I share with lifetime members. So if you like it, I think we have a couple slots left, like maybe 6, all right? I haven't talked to Carlos yet, but I think we have 6 slots left. So for lifetime members, this is some of the information I share. This is one of the many lessons. But here you go. It's called max profit. So first, you need to have a spreadsheet of your options trades, okay? You've got your options just like my spreadsheet. The name of the stock, call, put, expiration, strike, number of contracts, what you paid, how much you get for it when you sell it, okay? It's the day when you sell it, you need the extra column. So I bought something for $2 and I sold it for $4. I made 100%. That goes in the column, 100%. All right. Now here's what I do to get max profit. I look at the end of the day and I say somebody could have paid me $5. That was the max somebody paid for that contract. I bought it for $2 a week ago. I sold it for $4 today because that was my 100% profit I was looking to secure. But somebody during the day paid $5 for that same contract. That's called max profit. So you take the difference between the max profit, $5, and your $4 that you sold it for. Again, you're happy because you made 100%. But here's where the trick comes in. It's called max profit for a reason. You find out you're missing $1, which is 25%. So in the last column, you make 25% and boom, you put it there. You do 10 or so trades. After a while, I would say to myself, Matt, look at your spreadsheet. And I'm looking at my spreadsheet. I'm like, I made 100%, 92%, 94%. You know what? I would pull out my spreadsheet. I don't want to do that now. But I made 92, 94, 96. And then I look at my max profit column. And I'm like, I missed 24% here, 20, 22, 18, 20, 26. When I see that every time I sell a contract, and remember, I'm trying to call the top. That's what I teach you guys, plan ahead. So I see every time I call the top, I'm off by about 20% or maybe 22% just for that day. I don't care about any other day. If it spikes or goes down after, I don't care. I'm already done with the option. So here's how you secure max profit. On your spreadsheet, you have your buy amount. I paid $240. I sold it for $480. Okay, that's 100%. And then you see what you could have got. Oh, it would have been $6.20. So I missed out on 30%. You put that in your special column, 30%. It's called max profit. After a while, you get 10 trades and you're like, average out what you're missing out on, 20 to 30 to 40%. Some of you miss out on a lot. You sell things way too cheap. Tony, I'm talking to you. There you go. You got an honorable mention. Tony sells first thing in the morning. He thinks he's getting max profit. And then he talks about for the next 3 hours that he did not get max profit, that he sold too soon. But he feels good with 20% profit or 25. That's good. He'll learn. But if he uses the extra column that I just taught you, so if you're just joining now, you have to look at the extra column, watch this full video, all right? The extra column will teach you ever a week of trades, 10 trades, 12 trades. You're going to see your max profit is like 25% that you're missing out on. So the next time I enter a trade, I go, okay, Matt, you were going to sell it for $4. But instead, your max profit's telling you 25% you can get. You should sell it for $5. And then I'll tell myself, Matt, don't get greedy, but I'll sell it for $5 and it's going to work. It's like when you play pool. Here's my analogy, okay? You got the pool ball, the cue, right? Cue ball, and you're shooting all the way down at some ridiculous angle, and there's no way the ball is going to go in. But yet it does. If you hit it perfectly, it goes in like it's supposed to. The same is true with what I'm telling you. Although it doesn't make sense that somebody's going to pay you that much money for your option to max profit, they will. It's the same way I tell you to plan ahead. Say you buy a house for $1 million today, and tomorrow you put a sign on your lawn that says, I want to sell the house for $1.5 million. That someone gives you the cash. Here's your $1.5 million. You would move. You'd get out. You just made $500,000. You made 50%. The same is true for options. When we enter into options, that's what you're looking to do. If it's 50%, you secure 50%. 60%, that's what you do. The stock spikes 4 or 5%. Boom, there's your 50%. You're out. Now, why do we get out? Because stocks don't continuously go up. They don't continuously go down. They have a head and shoulders. So I teach you guys, we look for the top to exit. Once we realize what the top is going to be, we plan ahead. So when it spikes past that top, we're out. We're done. We don't have to worry about the position. Now, if it's a new position, here's another secret, okay? Another tip of the tips of the trade, I guess. A new secret. When I enter into a position, if I don't have to average down, I will usually return over 100%. So I already know what I'm looking for. If I buy something for 3, I'm selling it for 6. I'm looking for 100%. Now, if it's a battle, I buy it 3. It goes down 40% according to my rules, my option rules. They're on the website, okay? According to the options, it goes down 40%. I buy 2 more contracts or I double down. Then I don't look to make 100%. If there's no battle, I'll make 100% every freaking option trade. If not, and I'm in a battle, I'll take 20% because my option position was beat up 40%. So when it rebounds and I average down and it spikes, like, let's talk about it, SNRE, right? Or SRNE, whatever it was, Sorrentino Therapeutic. My first position, and watch yesterday's episode. And if you don't know how to average down in options, episode 37. It's got a couple thousand views. Episode 37, I tell you how to average down. So if you're new to options, and I gave a private lesson today, if you're new to options, please watch episode 37. I talk about it real slow. I say double your position. These are simple things. Doesn't take a magician or a mathematics or anybody with rocket science to know this. You just know how to double a number. I put in 4, I'm putting in 8. I bought 2, I bought 4. You double the number. It's really easy. I simplify. That's what I do. So please, if you haven't seen it and you're new, okay, YouTube's suggesting a lot of people to me these days. Watch episode 37. If that's the only thing you do, you're going to figure out how to average down on options. Now, if you don't, in my example, I'll give it real quick. I bought my first position at $1, my second position at 80 cents. So I was in for, let's say, 2 options. I was probably in for like 50 options or 60. Actually, it was 30. Then I bought 60. And then the next time when it went down to 58 cents, I bought 120 options. I had 210 options this morning. But instead of my price being $1, I took my price down to 74 cents. So when it spiked this morning to $1, I didn't sell, but I sold at 96 cents. So from 74 to 96 cents, I made 25%. Now, if you don't know how to average down and you only average down twice, 1, 2, you only made $6, which is about 8%. Now, if you don't know how to average down at all and you only follow the alert and jump in full with 2 feet and you bought all your positions at $1.01, like I suggested, you lost 5%. So that's the difference why you need episode 37. You have to know how to average down. If you don't know how to average down, you're not going to do it. So I taught you max profit, that column. If you're not knowing about this, please, you have to watch this from the beginning. I know it sucks. You're giving up like 30 minutes of your time, not even, maybe 15. I'm teaching you a lesson that is going to change your life. That's how sure I am. This episode should blow up. Please, if you like that lesson about max profit and you think it's going to benefit you, and that should be every single person watching this. There should be like a couple thousand people. Pay it forward. Share it with 2 people you know. Just 2 people. If 2,000 people share with 2 people, that's 4,000 people. And they'll share with 2 people. That's how we're going to grow as a family organically. All right? It's an algorithm right there. Please, I love math. Click. Make sure you like it. Make sure you subscribe to the platform. Make sure you subscribe to the YouTube. All right, let's get into some slides. I didn't organize the slides today, so I'm not sure how they're going to work out. Okay, Matt, you're going to cry. Amazing. Remember I said I never took $1,000 profit since I started trading in January. Guess what? UVXY in just hours. Okay, yeah, so she made $1,000. She's never taken that on one trade. I know a lot of us have. It's not a big thing, but it is to some people. To some people, one trade of 100% on $100 is the world. They have $100. They turn it to $200. That's what I'm talking about. It's percentage gain. It's not about how much money you have in your account, whether it's 5,000 or 500,000 or 15 million, like 2 of my followers have, okay? It doesn't matter. It's about doing the right thing and following the rules. And I don't care. You don't get special treatment if you have 15 million or you have 200. You follow the rules. That's how you make money. Next slide, please. All right. I have 100%er. You bought UVXY. Okay, so we were talking about that a lot yesterday. Now, why was UVXY the focus of our conversation? Because we mentioned it for now 2 days straight. In fact, I've called it for 2 days straight. I said exactly what would happen, when it would spike, when it would go down, that it would spike again, that it would go down again. People are returning crazy numbers. I returned 6 figures. I returned 90,000 yesterday and over 20 today. So that's over 110, probably 113,000. I have a few options contracts going into tomorrow. Again, when I trade options, it's less than 1% of my portfolio. So please understand, I like to take risks. All right, next slide, please. Oh, he was showing you the peak and the valley. Yeah, I'm sorry. I point out the tops and the bottoms. That's what I'm good at. I'm good at calling the bottom when we're looking for something to go up. I'm good at calling the top when we're looking for something to go down. It's just something I'm good at. I see patterns. For the week, UVXY portfolio. Your portfolio made 193% last week. That is excellent. Again, we've been on fire now for 7 weeks straight. We've had one bad trading session out of the last 25. So 24 out of 25 trading sessions. What is that? 92%. No, 96%. Sorry, I'm a little slow. 24 out of 25. That's how well we're trading. The last month and a bit, we're trading at 95%. People are crushing it. Next slide, please. I've got great slides for tomorrow. Ridiculous returns. All right, the power of averaging down. This is what I was talking about. Now, this gentleman, he's overly anxious. So if that's you and you get worried about your position, meaning he has a position, it's going down, he'll ask 10 questions about it. Hey, are you worried about this? Are you think it's going to recover? Do you think this? Do you think that? I always think my position is going to recover. If I don't, I would tell you guys I'm going to sell. I don't want to leave bag holders. Some of those gurus, I haven't spoken about gurus. Maybe when I'm done with slides, I'll badmouth some gurus or something like that. So my point is, he averaged down correctly. This is his return for what? Is it a week or a day? It looks like a day. When you average down correctly, it spikes. When your stock recovers and you average down correctly, now you don't have to carry your average to the next day. If you can't day trade, you do. But say you have a lot of money, you average down, and then you want to get rid of some of your position at 3 p.m. before the crazy market. You can do that. We secure profit. You're just lowering your average cost. If your average cost goes from $1.06 to 74, you're crushing it. It's over 32%. Next slide, please. I get carried away sometimes. Sorry. Very emotional. Matt, my man, I've single-handedly turned my 1.5-year long losing streak into a profitable in the matter of 3 weeks. Lifetime membership is looking very attractive. Okay, you're not a lifetime member. It's okay. I try and help everybody, but I love charts like that. And everybody's chart looks the same. So when you look at stocks and you're like, that's a good chart. That's a good chart. I love looking at charts from my members. I ask you guys to tweet it in public so that everybody will see it. The only way we spread the word about the platform is by spreading the word, but by sharing results. If we don't share results, people are like full of shit. But go back. I dare anybody, watch any of my episodes. If you're new here, 37's good. They're all freaking good. And we crush it every day. All right, next slide. I'm really happy for you. I love this stuff. All right, Matt, never made it. Oh, this is the same one. She just showed it again. Now, next slide, please. Sorry, I didn't want to confuse everybody. All right, TIGR. Okay, so I mentioned this yesterday on the dip. TIGR, this is the alert I gave out, okay? 2 days ago, I bought 2 option contracts. When it dipped yesterday, people have been saying, Matt, are we going in? Are we buying TIGR options? Yes, the whole family knows what the deal is. We all like TIGR, TIGR. There is demand. It's going higher. But we don't want to pay. We don't want to have FOMO. We don't want to chase. So it was $23 flat when I gave the alert. It dropped another 12 cents. So anybody that missed my alert got in better than me by a nickel or a dime, which is $5 or $10, which is a few percentage points. It's always important to beat Matt. It seems to be everybody's favorite thing to do to get in better than me. The point is, spike, good for tech. When 10-year dips, it's good for tech. So I haven't spoke about this, and maybe I'll speak about this too if I don't forget. But tech is going to go on a rampage, 15%, 20%. So if you're in the right tech stock, it's going to go 40%. So this stock will gain another $15. It'll be closer to $40 by like September. Next slide, please. All right, here's the 10-year. So what happened yesterday when everything blew up is the 10-year went up 8 basis points, right? What happened today? I think it went down 4 or 5 basis points. Point is, market's settling. UVXY, that's why it's going down. Any little spikes you have in there are buying opportunities for puts. Next slide, please. That's what we learned. And I see it on the message board. All right, so what was I showing you guys here? End of day, maybe yesterday. why I saw demand and thought it would spike this morning. There was heavy buying right before 4 p.m., and that's what I see. So when it spiked 30 cents this morning, 30 cents is what, 3.5%? You can't look to kill it. We're not looking for 10%. This stock, although it'll be above $9 soon, wasn't going to happen today, not in this tough market, but it'll be $9 as soon as there's heavy demand, heavy volume. So what I saw yesterday told me I'd get 3, 4, 5% out of it, which in change would make me profitable. I claimed 25% from that. Granted, it could have went up more, and I could have been like, yes, I missed out on 80%. The point is, know when to take profit. I averaged down on this one 4 times. So I was beat up. So 25% sounds awfully good. Next slide, please. This is what I showed my platform members yesterday night. All right, I don't stop teaching ever. But what I said is the last largest inflow day for the UVXY was followed by an outflow day saying that the UVXY would go down. So we were not worried this morning. When the UVXY was spiking 2.5% pre-market, we weren't worried because we knew if it opened 2.5%, we were just going to buy more puts. Now it didn't. I think it opened actually flat or down, and then it dropped out of the sky, and I think it approached $30 and like 30 cents. Oh, yeah, that's when I sold my first, and then I bought back when it spiked again. I mean, the UVXY is a gift. Right now, it just keeps giving. With all this volatility in the market, it's the only thing we like to play besides for other stocks. Next slide, please. I'm just showing you guys how I see patterns. All right, law of averages. Here you go. This is actually a tweet. I guess I sent too many slides to Carlos. I didn't remember. But I basically said after 3 straight days of inflow, which has never happened, there hasn't been 4 straight inflow days for the UVXY in over months, multiple months. So just based on the law of averages, 3 straight inflow days, today had to be an outflow day. It had to go down today. And what happened? It went down today. I don't have a crystal ball. I don't tell the future of the market, but I know how to analyze numbers. I know how to analyze patterns and data, and that is how I make my predictions. Next slide, please. Okay. Here was what I did yesterday. So UVXY at 33.15. I doubled down on my put contracts. I bought 188 $32 contracts. I still think it's going to go to $30. I was just telling everybody on my platform, this is what I did before the end yesterday. And then I sold this morning. I bought back. Let's go to the next slide. Again, I must have gave Carlos way too many slides, so I apologize. All right, we're done with slides. So I wish I remembered what I was going to tell you guys while we were doing slides, because I said after the slides, we can definitely do something like this. But I've got no freaking clue. I did give up cigarettes, but I got this great pen here. All right, let's get to some questions, okay? Anybody that has questions about your stocks or positions or options or what to do, or if I like your stock or if I hold the stock, it's like Jim Cramer's lightning round. Oh, I remember now. Let's remove that question real quick, okay? Because I want to tell you about other gurus. Other gurus make these videos. Yo, can we remove the question, Boris? Is that possible? Other gurus, they make these videos and they tell you guys in advance. They shoot them like 2 or 3 days in advance, or maybe the next morning. Oh, AMC is going to the moon. Oh, let's do a live conference. Oh, GameStop this. Now, I'm not saying that shit can't happen, but they're doing it in advance. They're not giving you market data as they're analyzing it. So that's what I want to do. I want to give you market data. So other gurus, bullshit. All right, that's what I'm calling Jim Cramer. He's a suit. He answers to all the institutions. Oh, they're all his friends, all the CEOs, this and that. Because he's touting their stocks, and all the dumbasses that follow Jim Cramer buy his stocks, and all the institutions short Jim Cramer stocks. And then you have other gurus who go on like Chris Sane, and he'll talk about, oh, we're going to short Snap, right? We're going to short Snap. Snap's going down, blah, 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 blah. And what happens? Snap goes up $10. He doesn't answer to anybody. These people don't answer to anybody. Jim Cramer gets annoyed and has a fit on TV because Twitter people are mad at him. Dude, Twitter people can comment all the time about how I trade or what I'm trying to teach. It's the assholes that I get rid of. But anybody that just wants to critique me, that's fine. Everybody can critique me. I like that. That's why it's $3.49 a week. I want everybody and their mother to join, and their brother, and their pastor, and everybody in church, and everybody in the high school. And okay, let's get to some questions. Please pay this forward. I mentioned this before. We're going to have 2,000 people watch this video. So please, everybody, show it to 2 people. 2 people you have, maybe your college buddies that you haven't spoke to in years. They're in New York, they're in Boston, they're in wherever. This dude knows how to trade. Watch this video. Give up 30 minutes of your life. It'll change your life. That's what it is. It's life-changing. It's stupid, but it's life-changing. It's educating you in like an AP level. Like you made it through 1st through 12th grade, and you've only been trading for 4 months, 8 months, 2 years, 3 years. Doesn't matter. I'm giving you 13 years and AP knowledge like that. Oh, yeah, somebody on Webull said, oh, yeah, you guys are his lackeys, they called you guys. Lackeys for following Matt. And I said to him, no, they just like to make money. I mean, it's as simple as that. Nobody in their right mind would pay money a week. It doesn't matter if it was $2 or $20 to lose money. Actually, that's not true because you guys, or not you guys, but some of you watching this are the same people that watch Zip Prater and Chris Sane and some other dudes like that, and you pay for their classes. Some dude said he spent $26,000 educating himself on options, and he's been with my platform for 4 weeks, and he's changed the way he trades. 4 weeks, $349 a week. He paid me $14. He made $16,000. I'm going to show you the slide tomorrow. I've got the slide. He made $16,000. He paid me $14. I mean, what is it? All right, let's get to the questions. Sorry, I get sidetracked. It upsets me that there are people that take advantage of 30 million traders out there. If we were all on an equal panel, 5 of us with me in the middle, just talking about our knowledge or how we invest in stocks or how we secure profit or how we trade, I would trump them if it was a live event. They'd be looking at note cards like, yeah, I trade. I use the inverse ratio curve. And when that happens, I mean, these guys, you should see the mass trader, right? 130,000 followers. The dude's mass, he mumbles to himself. Yeah, so on this side, I'm like, are you kidding me? 13,000 people are watching him live. And I have 200 people. He's at 13,000. He mumbles about a computer screen and he's showing you shit that doesn't even matter. He's telling you guys to buy 1 share at a time. That's going to change the price. That's the stupidest thing I've ever heard. Does he not know algorithms just sweep up your shares? It's like dirt on the ground. So you use a brush and you sweep it up. It's gone. 1 share, 1 share, 1 share. It doesn't do anything. It's constantly swept away. But yet he has 13,000 people live. He's wearing a mask. He's all covered up. I'm trying to provide you entertainment. So please share this. Instead of with 2 people, share with 4. Pay it forward. Join the community. You don't like it? Quit. It's $3.49. It's the cost of a coffee. Look at my spreadsheet. All right. My options alerts are 80%. My stock alerts, I'm 18-3. 18 wins, 3 losses. Show me anybody that can do that. I'll put my numbers up against anybody. Oh, yeah, put your P&L. I don't care about my P&L. If I cared about my P&L, I wouldn't do a platform. I wouldn't educate you guys. I'd be in front of the computer all day, stressing myself out. I stress out enough because I don't want to baby you guys, but I do want to hold your hands. I want to make sure you're doing the right trade, but I don't want to spoon feed you. I want to teach you how to fish. I don't want to fish for you. I mean, it's a simple fact. All right, can I explain how you see demand and volume? All right, somebody asked this today. I said, ask on YouTube if you want. I guess you got here nice and early. How do I see volume? Okay, there are 3 charts I look at. You guys are getting like a supersized lesson today. 3 charts I look at. The 1 day. The 1 day chart tells you the dip and the spike. So if you're selling, you're looking for the spike. If you're buying, you're looking for the dip. That's easy. That's the 1 day chart. The 5 day chart generally tells you the direction of the stock, the momentum. If you start up here and you're lower down here, that sucks. Vice versa, okay? It tells you momentum. Now, here's how you see demand and volume. You look at a 1 month chart. So I'm going to use my favorite, TIGR, TIGR. Anybody that wants to follow along, look up TIGR. So you'll look up TIGR. I can do it from memory because I love this chart. Sick, all right? May 22nd, 23rd, and 4th. You're looking at the 1 month chart. May 22nd, 23rd, 24th. Outflow. Demand was like this. You'll see little bars. Okay, use line chart. Use the simplistic line chart you can find. So you're going to see volume and demand. It was like this. Then all of a sudden on May 25th, it spiked like this. So the comparison was like this. It was 5 times as big demand, 5 times the inflow. Now, again, May 25th, they had earnings coming out. I told you guys a week in advance we were looking for that date because Futu had earnings and they mirror each other. They're the same company, basically. It's like the same company. It's like McDonald's and Burger King. If Burger King kills it, McDonald's will kill it. No doubt about it. If Wendy's is doing good, Burger King will do good. So the point was, Futu did well. I said TIGR will do too. We saw the spike. It went up like 15%. Then the next day, you'll see it. So it's May 25th, 26th, 27th, 28th, 5 straight days of inflow. That tells you there's demand. Then you see consolidation, which is a day of outflow. Anytime your stock goes up 5 straight days, 4 straight days, 6 straight days, you'll have 1 day of outflow. It's profit taking. It's what you have to do. So hopefully that helps you. That's my shortened version. I don't know if we're going a full hour today because I definitely do not have enough water. I'm seriously thinking of only trading the SDOW, UVXY. They're the only things you make 100% in. Yes. So if everybody remembers, if you go back to episode 17 or maybe 18, I started that episode and I said, this is the best day of our lives. And this is why. We just figured out what we're going to trade. Instead of trading stocks. Now, I mentioned when you trade a stock, then you got to worry about earnings. You have to worry if there's demand for the stock. If the demand goes away, then there's a short at play. Say you were in DraftKings and Hindenburg came out with a report and your stock fell off the face. That's crazy. Or say you're in tech and it's easier to be in tech when tech's going to go up 15 or 20% rather than being in a bad tech stock that might be overvalued that goes down 15 or 20% in the next 3 weeks. So yes, episode 17 or 18, I was like, boom, light bulb moment. From now on, we're just going to trade options on ETFs. I've been calling the market direction, and that might have been, 5 weeks ago. So since that time, episode 17, we've had one off day. Episode 17, we're at 42, 25 episodes. We've won 24 of them. So 24 out of the last 25 trading days, we have crushed it playing ETFs, playing our strategy in and out, in and out. We make money, we take the piles, and we make them bigger piles. That's it. Next question. Yeah, I'm so glad someone's acknowledging it. I get lost. Matt, could I take a look at POW? POWW stock moves with volume. It seems 300, 668, and you have two something calls at 35 cents. You didn't average down because of less. Yes. So if you have a call option, right, real quick, and your option is selling for like 30 cents or 25 cents, there's a good chance it's going to be absolutely worthless. Okay. That's why it's selling for that little. So people that show me 100% gain on they bought an 8-cent option at 16 cents, they're like, boom, 100%. That's the dumbest thing I've ever seen. I'm calling you out. If you do that, dumbest thing, I can only afford $8 options. Then don't play options. You're putting all your money in the bag. Your $8 options probably going to be worth shit unless you happen to be lucky and you'll make 100%. So yes, you can take your $80 and turn it into 160, but more than likely you're going to take $80 and turn it into zero. So please don't do that. I'm going to look at the stock. I don't know if I can comment on your option positions, especially if one expires tomorrow. So POWW. All right, we might have to actually come back to this question because, of course, my phone is choosing now not to work. So I will only have stocks on my watch list now. So we'll come back to that question. I'm sorry. And if I don't, please ask it under the private Twitter account. So yes, if you're on my platform, we do have an app, but we do not use the app. We use private Twitter. Why do we use private Twitter? Because everything is time sensitive, and I want you to get my alert right away. Even if you're following the Matt 10-minute rule, you still need the alert. All right, so let me see if I can get this back on. PO, we'll try one more time. If not, let's get to the next question. Yeah, I'm sorry. It's not letting me look this up. Okay, I missed the SRNE alert to sell, but I have 625 calls. Okay, yes, this is perfect, actually. So, yes, if you don't have calls that are expiring tomorrow, I easily see SRNE by $9 and change next week. So if you have more time, yes, there is demand for that stock. It's speeding up, and there is a short on the other side. So now actually, let me think, because there is a short on the other side, but it will move with the market. It's a 4-letter ticker, and I do expect demand. So let me actually look at this stock. Of course, it's not looking rare. So here it is. The fuck is it? Oh, there it is. Sorrentino Therapeutic. Of course, my data is not going to work on my phone either. All right, well, let's get to some more lessons real quick because I'm not really sure why this isn't working. You know what? Let's do this. If not, I'll get to the questions, and I can probably answer that question anyway. Let's reset it here. It's very strange. No, for some reason, the connection's there. It's just not working. I wish we had a tech person on the line here to figure this out. Give me about 10 more seconds to just figure it out. I'll get off my Wi-Fi, and we'll cancel this, forget this network. Yes, and then we can answer some questions. Sorry for the delay, everybody. I know you guys are patient. 5G, right? 5G should have this. Then I can look up POW. Yeah, now it's coming in. All right, POWW. Oh, ammo. Okay, so you're going into guns. Okay, ammo stock. What does it look like? Okay, the 1-month chart looks pretty good. I would actually think tomorrow will probably be a down day, unfortunately, for this stock because it looks to consolidate. But I think you're going to have a decent week next week. And I wouldn't be surprised if this cracks $8.50 next week, which would be, a 15% gain. So, yeah, POWW, it's $7.38. I would be holding. I would not be surprised if there was consolidation for another day. But I think this stock will cross $8.50, $8.60 next week. SRNE, that was POWW in case you missed it. SRNE, so I think that's going to go. SRNE will go to $9 at some point next week. So that's the good news. I don't know why my phone's acting so crazy. Volume was so small today. It was inflow today, but that's why it went down 3 cents. Volume was so small. You're looking, can you see my phone? There you go. You're looking for that big spike, not these little baby pinkies. You're looking for this dude. So when that dude comes out, and it might be tomorrow, it might be Monday, it might be Tuesday. It doesn't take more than 4 days. So I tweeted out to my people, why do I like SRNE? Now, again, I'm out of it. So I don't care if it spikes, but I'm out of it. Let me tell you why I like it. Because I looked at the chart. In the past 2 weeks, it's had 4 large demand days. In the past 2 weeks. I looked in the past couple months. The last 2 weeks, it's had 4. So what does that tell me? History repeats itself. So sometime in the next week, it will have a big inflow day, and it will spike. There's no doubt about it. Next question. So, yeah, I would average down. I like my calls. I'm paying to tell you all to hit the like button. Yes, Russ, hit the like button. Hit the subscribe button. That's all I want. I want subscribers. I want people to watch. I just don't understand. If I wore a mask and mumbled how I could get 130,000 followers, and then somebody will say to me, Matt, the dude's been doing it for like 4 years. You've been doing it for 8 weeks. I don't give a shit. If I'm eating a good sandwich and it's the first time I ever eat that sandwich, I'm never going to eat that other sandwich again. Never. I don't care if it's been around for 6 years. I'm going to eat what I like. I'm going to watch what I like. So I'm trying to provide entertainment, value, information. If you're just tuning in now and you missed the start of this, okay? I taught you the one major lesson today, max profit. I taught you a new line in the spreadsheet, something I only share lifetime members. Well, why am I sharing it with you? Because only 2,000 of you are going to watch this. And if you do share it with 2,000 others, it'll be 4,000. There are 30 million new traders out there that do not know about max profit. So that is who I want to attack. That is who I want. I want to change the way you guys trade. I want institutions, instead of taking advantage of you, to fear you. Not to fear you like AMC and GameStop, but to fear you saying, wow, I'm trying to call the bottom. Somebody else bought up the shares. It didn't actually go down. And then the institutions are chasing. If the institutions have FOMO and they're chasing the stock, they're going to push the price up. So thank you, Russ. I don't know how I got talking about institutions and shit like that. But yes, let's change the way you guys think. All right, next question or comment, please. Sorry, I have the craziest nose itch. All right, talking to the other individual who had the first question about volume. So the SDOW spikes when the Dow is bad and we buy puts. Okay, yes, just to explain the ETFs real quick. Okay, for anybody new here, you have the VIX, which is the volatility index. Most people have heard the VIX, the VIX, okay? But that's not what we trade. We trade the UVXY, which is like the VIX on steroids. It's the VIX times 1.5%. So if the VIX moves up a lot, the UVXY spikes a lot. Like we see movements really quick. You didn't know it moved that quick. Imagine being on the wrong side. So we keep taking 100% gains. Who do you think's giving us those gains? All those other people on the wrong side that think the market's going down in the tanker. So remember, if we go back to episode like 17 or 18, when I pointed out the W for the NASDAQ, and I said, this could be the moment. And if this is the moment, you're going to remember this episode. And I said, this could be the third leg of the W. We could be going to all-time highs right now. This could be the third leg of the W. The NASDAQ isn't crashing. This was after like 7 or 8 days the NASDAQ crashed. And I said, I think we're turning around. And since then, we've been on fire. So I can't be more proud, more happy. My platform's awesome. The people are awesome. Thank you. And this is Love, who helps everybody out. She's the best. And she's the one who took 4,000 into 25,000. Good for Love. And then 25,000 down to $800 and something dollars. Bad for Love. $800. Did not give up. 5 weeks later, I think she crossed 46,000 today. She texted everybody and showed everybody 44,000. I have the slide for tomorrow. And she said, should I sell? Is it time to take profit? And then when we said yes, she showed everybody else 46,000. So imagine 1,000 to 46,000. It's atypical. It's not typical. But it is following the rules and doing what's right and averaging down the right way and securing profit. If she wasn't securing profit, I'm sure she would have been in that elevator, up and down, up and down. Elevator is when you watch your stock or option go up. So you're even, and now it's up 100%. And then it's down 100%. And then it's up 100%. You're not taking profit anytime. You could have been out, in, out, in. That's what I teach. You don't need day trades to go out and in. You make a trade, you wait. I've gave 5 trades this week. If you only trade my alerts, nothing else, just the ones that go on the spreadsheet, the alerts, right? First off, you're crushing it. You're probably up over 100% just on this week. But also, you don't have to day trade. Monday and Tuesday, we got out on Wednesday. Okay, Tuesday, we get out on Thursday. Tuesday, Wednesday, Thursday, we average down and out on Thursday. There's 1 day trade. TIGR's continuing, and STX we're still in. So there's 1 day trade out of all 5 days. So I'm not putting your account in jeopardy. I'm helping you take small piles, big piles. Next question, please. I mean, this is it. It's all fact. Oh, thanks, love. You got it. Okay, next question. Yeah, what's going on? I like these commentaries. Is eBay's call still worth playing? Interesting. eBay's volume has been low. So whereas tech stocks are going to be strong. So I talk about the 10-year going down, no inflation. Tech stocks will be good. Certain tech stocks will probably go up 30%. Other tech stocks only 5%. eBay, I haven't seen the demand in volume since I exited out. I also sold my options earlier on this week, so I haven't really looked at it, but I will look at it. Today was an outflow day. Last 3 out of 4 days are outflow days. eBay doesn't seem to be a fan favorite anymore. And volume's been light since June 4th, okay? And we're June 17th. So no, if you're still in eBay options, I would be out of them on the next spike. If you get a spike tomorrow, 65.33. It's not going down a lot, but if you get $66, I think that's when I exited out, 66 and change. You get 66, perfect time to get out. It sets up a couple percent tomorrow. Get the hell out. It's up 2%. Get out. There just doesn't seem to be demand, but it could be consolidating. But again, I would rather be in a different 4-letter stock, a different tech stock. Next question, please. There are certain stocks. Okay, NVIDIA. Oh, guys, so NVIDIA, I gave the alert at $582, and it spiked up to $645 within 2 or 3 days. 582 to 645. Then tech took a shit on itself, and it went from 645 to like 553 or 560. And then they came out and they said, we're going to do a stock split, maybe 10 for 1, 4 for 1. I don't know what the stock split is. It shouldn't change the price of the stock. And yet the stock went from 600 now to like what, 700 and change? 704 at least. That's what it was earlier. I thought it was 704. NVIDIA. I mean, I know 746. Holy cow. My point is there's been demand for NVIDIA ever since June 1st, which is what I'm telling you. It was over $600, just over 600. So you're basically taking a stock that in the last month is up 31%. And in the last week after today's jump, I mean, it just jumped today. If you were thinking about it, it was 707 this morning, which is what I said, 704. And now it's 746. No, I mean, it could go higher, but it's risk versus reward. So how many times have you seen a stock spike? It levels out, and then it goes back down to its level. So it goes from 706 to 740, hangs at 740, and then goes back to 706. So your 750 calls become crap. All right, so you have a 750 call. How do I think it'll do? I would sell, bro. It spiked. You could easily get another spike tomorrow. I don't know whether it's why it spiked today. Maybe it spiked because it's doing the split tomorrow. But if it went up 4% today, if you get another 1.5%, another 10 points tomorrow, okay, 746 to 756, I would get out. Look at your delta on the option, multiply it times a 10-point movement, and figure out what your option is worth, and that's how you plan ahead. If you don't know what I'm talking about, watch my options video. You use the delta. Use the delta to figure out your options price. All right, next question. By the way, anybody that answered questions to, please send this out to 2 people or 4 people or whatever it is. Oh, also, all these people that are asking these questions, if you can see them, if you can't, there's a button on the side where you can give like a $2, $4 something tip. It's called a super sticker. I didn't know what it was called, but it's there. So you have July XL calls. How high do I think it's going to go? I don't know. I mean, I definitely think XL, I mentioned this yesterday, is worth at least double digits. And when I say double digits, I think like the high $10, $11 range, which is crazy because it was $23, $24. I think 14 is a safe bet. But let's talk about how high by July, okay? By July, it's like $8 and change now. It spiked to $8.50 in the morning. The demand is there. It's entering the Russell 3000 tomorrow, I think, like that. So let's talk about July. July, I'm going to go with $10.83. All right, $10.83 by July 16th expiration. Next question, please. Oh, I'm definitely running out of water. All right, hey, Matt. You are in Romeo. Oh, why didn't you get out, bro? Why didn't you get out? It spiked this morning. Just like SNRE spiked, and I thought I was good at 96 cents. And when I tweeted out, dude, I just sold it 96 cents, 3 other people wrote, I sold it $1. So they got 4% more than me because everybody's thinking the same thing. It's always good to see your profit, especially if Romeo or Green Energy was beat up. Now, other green energies did well today. NEO off the freaking charts. Remember NEO at 30? NEO off the charts at 47. I predicted $55. It's coming, right? And other green energy. Canadian Solar off the charts, 3.5% today, 4%. I don't know. First Solar, I bet it did good too. I mentioned those two yesterday. I mentioned those two every day. Green Energy, First Solar, Canadian Solar. They have earnings. All right, Romeo. So Romeo is good too. Oh, remember SPI Energy? And it spiked yesterday. And I said yesterday it'll probably go down back to 8%. It was up 28% pre-market. It went down to 8% yesterday. And what did it do today? Gave away another 4 or 5%. So if you were in SPI and you didn't get off at the top of the elevator, you literally rode the elevator up to 88th floor and rode it all the way down to the second floor. All right, let's look at Romeo. So that's the thing. We just try and take profit. If the market was like a bullish market and it was up every day, you wouldn't worry about your stocks. You'd be like, this option, boom, what am I making today? Easy market. If it was an easy market, none of you would find me. You'd be crushing it. 2020, March 2020, when the market capitulated, you couldn't miss. You could be like, hey, Steel Cup Company. Boom, throw a dart at it. Okay, sorry, Romeo Power. I get sidetracked. All right, the 5-day. I mean, it looks like it's consolidating. I'm not going to lie. It looks like it's consolidating. Outflow today, it popped to 1028. Yeah, I mean, I like Romeo Power. Oh, but you're talking about tomorrow. I mean, you need inflow. If it's a bad Dow day tomorrow, which history is probably going to repeat itself. I mean, I can look at the Dow. So Romeo had outflow today. It started the day as inflow. It started the day up. It went negative. It went negative by 4%, and then it finished up negative by, I think, 2%. Where's Romeo? Yeah, 2%. It's up 0.8% after hours. So you're down like 1.3 today, okay? There was inflow. I'm hopeful for you tomorrow. Again, you're looking to sell in the spike. So let's look at the spike this morning. Let's see where it was. Yeah, it was right at open. Spiked up to like $9, right? No, $8.99. I thought it was going to $9. $8.90. That was it for me. Only because it so closely matched my two other stocks. XL was $8 going to $8.50. And then SNRE was going to $9. It hit $9 flat, and that was it. So it's almost like $9 is a cap, then it goes back down. And it's crazy. Same thing with when you get to $100 in any stock. It's almost like a cap. So what would you do? You're in for 95 cents and you're at $8. Oh, yeah, you can get a run to $9 tomorrow. Bro, you can easily get a run. I mean, when you look at this stock today, you probably should have averaged down before close. Let's see. The low point was here. They were selling right at close. I mean, it would be risky. It would be risky. I probably would have took the risk. I probably would have bought these options. I'm assuming you could have bought them for like 60 cents. So you're at 95. If I bought some calls for 60 cents, I would have spent double the amount. So let's say you're at $1. I'm at 60. You have one contract. I buy two. That's 220. You can take your average out to 71 cents. And then what would I do? So you buy double what you have before close today. Maybe you could do it tomorrow morning. But then again, you'd be dangerous because they expire tomorrow. But let's say you did it today before close. Take your average down to 71, 72 cents. And then you put your sell at 74 cents. 5% gain. That's it. 74 cents. Now, if it goes to 74 cents or 75 cents, guess what? You're still down 22%. If you average down and spend twice the amount of money and you get 74 cents, a 16-cent spike, and it was $9 today, then yeah, you're going to be fine. So that's what I did with my other options. Again, it's dangerous. But if you understand what you're doing when you average down, and if you don't, watch episode 37. And if you just logged on here and you haven't seen this before, please go back and watch the beginning. I teach you guys about max profit, okay? Don't worry, lifetime members. There are still other secrets that I haven't told anybody. I haven't told YouTube. I haven't told platform members because there are things that take me my lifetime to figure out. And you need to be a lifetime member to get the lifetime, information. That's as simple as that. Yes, super sticker. Thank you, Daniel. I don't know if we're putting it on the screen, but Daniel gave us a super sticker too. That's awesome. I'm getting pizza tonight. Hey, Matt, can you explain if outflow is profitable or if inflow is profitable? Okay, outflow means you're selling, okay? It's red on your ticker. If you look at the 1-month chart, I don't know if it's available on other things, but I look at the 1-month chart. It's there for the 3-month, okay? It's the lines at the bottom that are either green or red. They line up next to each other like this, all right? And these are volume. So when you have volume here, and this one's bigger than every other volume thing, there's major inflow or outflow that day. No, I wasn't giving you the finger. I was just having a little fun. The point is, if it's inflow or outflow. So you want to see green. You want to see inflow, and you want to see big volume. You want to see your stock does average volume of like 1 million shares. You want to see on the day that it does 14 million shares, that it goes up $1.10, that there was inflow, that there wasn't people selling. Now, if you see outflow on the day your shit spiked 20%, but you're seeing outflow, there was more selling than buying, that's not a good sign. It spiked 20%, but they're going to sell off. So I bet you if you look at SPI Energy yesterday, outflow is probably huge. In fact, let's do that. I teach you guys, make predictions. Every single thought you have I want you to make a prediction for it. So my thought right now is SPI must have had outflow yesterday. So I'll look at the 1 month chart. Boom! Huge. Can you see that? Huge outflow. You see those yellow spikes? You see how much bigger they are than the little spikes next to them? That is showing you volume. So when I show you volume, you're looking for spikes. When you see red or yellow on my phone, because I like yellow, when you see big red, that means people were like, I want the hell out of this stock. When you see huge green, like look at TIGR. I gave this example before. The 1 month, when you start on May 25th, large green, large green, large green. Then there's the Twin Towers right there. Okay? That's what it looks like. Thank you. Hopefully you understand. The next question, please. I don't know. I'm sorry. I was going to make it short today. We're not doing that, obviously, because I still have water and soda. All right, Matt, what indicators am I using to stop? This is a great question. I'm going to keep this one simple, and I'm not picking on you, Dimitri. Ready? What 2 indicators do I use to spot the top and the bottom? Right here, baby. My eyes. That's it. There's no secret sauce to this. You look at a chart, okay? The 1 day chart. You'll see it every day. When you look at the chart and look at it after hours, any stock you want, know it like family. But let's look at a chart. You can be like, all right, let's look at Facebook. Let's look at a chart I actually have up here. Let's look at, let's flip a chair. CA, or AI, Computer Associates, okay? AI. So we're going to take out the 1 day chart right here. Let me just get it right here. All right. So I'm looking at the 1 day chart, and I can see that the afternoon dip that happened between 12 and 1 o'clock was the only dip, because I knew this morning there was demand for AI. So when it reaches $60 and then it dips to $58.50, I know that's my time to jump in. I know that's my dip. So usually your stocks will follow the market. Now, if you're in a shitty stock and the market dips, your stock is going to keep going because there's no demand. If there's demand for your stock, like TIGR or like AI today, okay, just for example, you'll see it spike up and then it'll dip, or NNOX, NNOX. I didn't mention that today, but I have mentioned it recently. So this morning I pointed out it was up 4% pre-market. Then it went up 6% pre-market. I'm tweeting this as it's happening. Hey, it's up 4%. Anybody? 6%. Then it went up. I think it went up like 15 or 20%. I think it went up 15%. I think it consolidated back at 8% for the day. Point is, I gave a tweet out to this guy who has options, and I said, here's what I would be looking for today. I'd be looking for a $7 move. His options expire next week. So I said, when the stock hits $35, that is when I would sell. So again, you're part of my platform. I give you extra indicators and extra answers. Questions. Next question, please. Let's see what we got. All right, thoughts on ITP? Oh, I think I know what that company is, right? Don't they make like toilet paper, or is that a different company? Oh, it's definitely a different company, right? Oh, no, it isn't. It's ITP. They make toilet paper. Yes, unfortunately, they might be a decent company. They've had absolutely no volume for like ever. And if there is volume, they're selling, and there must be a ton of bag holders. And they do 1 million shares a day. It's a penny stock. It's a Chinese company. They make paper towels, toilet paper. I'd get the hell out of there. It's not a good penny stock. I don't like penny stocks at all. But this one I would especially not like at all. All right, next question, please. Neo, you made good money from it yesterday. Yeah, no doubt. I've been talking about Neo since it was like, it dropped from 30. It was going to be my example. When I shot an options video, I originally used Neo as an example because I thought Neo would be $55 by September. It's going to happen sooner. It's 47, I think, maybe 45. But 55 by September, that shit was a lock. So I shot this option video, and the market took a crap on itself for like 3 days. So I shot the video, and the market took a shit on itself, and I was about to release the video, and I'm like, I'm going to look like the biggest douche. See, this is transparency right here. See me and you? Transparency. I was in Neo, and I have these options, and I'm giving them out, and they're down like 80%, and I look like an idiot. Now they're probably up like 300, 400%. Yes, Neo, huge demand. Oh, what else? Xpeng, XPENG, or whatever that company is, the Chinese automaker. Xpeng, Neo, huge demand. Fisker, although Jim Cramer likes it, huge demand. I was there first. Other people like it in like the halftime show, whatever those guys are. One of them likes it. Again, Fisker will probably cross 20. Once it crosses 20, I'll probably sell. Maybe I'll take it to 21. Neo, yeah, 55 at least, probably $60, maybe even higher. I might have to up my price target on Neo. Next question, please. I'm happy for you. It's so nice to make money. Plan ahead, folks. I did that today. You left a lot on the table and was a big guy who took early profits. Yes. So unfortunately, I like to use Russ as an example. When Russ was in a bad play, which was Jumia, the demand for Jumia went away. Guess what, Russ? It's back. So actually, if you average down on Jumia, like I told you, and you went out to 2 months, 3 months, remember I told you what I would do yesterday? You said you lost 30,000. I said, really, if you want to do something on it, I would take 60,000 of my own dollars. I would double it, and I would go out to September. And I know it's a big chunk of money, and it might tie up a big chunk of your money, but that's the proper way to average down. So what happened to Jumia today? Anybody? Oh, right. At one point when it was up 4%, because I was watching it, I tweeted out, it's probably going to cross 7%. At which time, if Russ had been in Jumia, I would have suggested if it hits 7 or 7.5%, get out, take the profit. Would have been like 35% because he would have went out a bunch of months. If he had the options that expire tomorrow, he would have made clear over 100%. The point is, when you're in shit, you step out of shit. When you're in something good, the other day, I put Russ into UVXY puts. I suggested to him, and he bought them, but he didn't hold to max value. So I said, do you use your spreadsheet? The one that I just taught today, max value, the last line. Do you use it? Because that's how you choose your exit position, your exit strategy. You say to yourself, I normally make 50% based on this column, and I look at the last column, and the last column tells me I should make 30 more. So instead of planning ahead and making 50%, make 80, make 75. You're leaving money on the table, Russ. And especially if you're trying to make money. So I mentioned to him also how I average down on SNRE or SNRE or SRNE, right? Sorrentino Therapeutic. I said, did you average down? And he said, no, I still have 40 contracts. Now each contract was worth about $90. So he just lost 30,000 on this position, but he has 3,600 in this position. It doesn't make sense. And I meant to tell you this, Russ. It doesn't make sense that you had 10 times more leverage in this position. Even if you were averaging down, it doesn't make sense why this one would be so small. And I know this one was expiring tomorrow, but I said to you exactly what I was doing. Averaging down, I got my average cost 74, and I sold at 96. So hopefully you got out as well, and hopefully you made some money. Always, if you have a question, ask me, please. I want you to get max value. That's what the column's for. And if you're not using the column, go back to the beginning of this episode. Watch it. It's about 15 minutes in. I explain max value. Max value. That's what we want. When you say to me, how do you choose your exit point? How do you leave money on the table? I look at my spreadsheet. I know usually when I exit out of position, I leave about 12 to 15% on the table. So when I tweak what I'm looking for, instead of $1, I'm looking for $1.10. Instead of $2, I'm looking for $2.20. I get that extra 10%. When you add it on to all of my option plays, an extra 10%, you're talking about a lot of money, okay? Thank you, Russ. Next question. Didn't mean to use you as an example. Love you. UVXY, you missed the top. Expires tomorrow. What's the crystal ball say Friday? How are you down, bro? I mean, we were in and out of this trade like 4 times. How are you? I'm not picking on you, Steve. I'm going to look at it, man. But I don't know how you're down because where the UVXY ends up? UVXY. 3150, right? Something like that? 3172, okay? Huge outflow day. Yeah, you're going to rely on tomorrow it going down a whole bunch. You're going to hope that there's no craziness in the market tomorrow. And as long as the market is plus or minus 100 points in either direction, both of them, and there's no 300-point swings or whatever, you're fine. How are you down 38%, bro? Are you in calls? I don't know, man. It's off 22 cents today. It spikes and then it drops. When it drops, we sell. When it drops to $30.30, we sell. And then it spikes and then it went down to $30.80. We sell again. How do you know? You just use your eyes. You look. And if you're not looking and you're not following along, if you don't have time during the day to trade UVXY, and this is a warning to anybody that cannot day trade. If you cannot day trade, you never want to be caught in the UVXY overnight. Stock is okay if you're shorting or longing, whatever it is, but not options. Options move so freaking quick. And if you're on the wrong side, you're going to lose like 50%. All right, next one, please. I see a question about Tesla in there. Did I sell my XL calls? I sold half of them on the spike this morning for $1.50. I held the other half. I have 150. So I sold 75 at $1.50, which is great. I wish I sold them all. And then I had 75 carrying in to right before close, and I bought another 75. So I basically took my average down, and I took profit. That was it. So it's the same thing I tell you guys. But if I was smart like you guys, and if I was smart and not greedy, I was greedy because I thought XL could go to 880 today. When it was at 846, 847, it was going up. I thought it'd go at 880. That's where I had my other sell at, 880. So I took half. The other half was at 880. I bought some more. I think XL is going good. I was risky. I realized at the end of the day, I bought contracts that expire tomorrow. So I needed to move well tomorrow. They're $8 contracts, so I'm right there. But I really wanted to move something fierce tomorrow. So we'll see. I took a little risk. I meant to buy out an extra week. Next question, please. Ooh. This is the thing I just saw. So here's the funny thing about Tesla. So when we talk about expensive stocks like Tesla or like any other stocks that were out there. Now, there was a trading stock that was – okay, let's talk about Tesla. It's expensive. So the average human being, the average trader cannot buy that stock. You buy one share, you don't move it. You're like, oh, I like Tesla. I bought 3 shares. I bought 2.5 shares. I bought 5 shares. It's at $700. It's $3,500. That's a lot of money type. So when you talk about who's moving Tesla, it's institutions. And Tesla is now tech related. And I've heard so many people badmouth Tesla. And as many people as I heard badmouth Tesla, I hear people saying numbers like $1,000 a share, that it's in a consolidation phase right now, that it's going to explode to 1,000 in the next year. $1,000 in the next year. So if it's what 600 and no, it's got to be 7. No, it's 616. 616 is going to gain 400 points in a year. That's 66% in a year. So I don't know. You might want to think about some leap year options or something like that. I swear that's what they say. I've heard other people say that Tesla's worth like $180. I don't think that's true. All right, next question, please. I like it. I like Tesla. I don't really like Tesla. The demand is there. Okay, when I'm looking at it, the demand's been there since May 12th. Since May 12th, when we bought them, the demand's been for Tesla. Okay, another, what are those things called? Sticker somethings? Man, I should just stay on YouTube all day. You guys ask questions all day. I'll just be on live all day, and you guys just pay for questions. That's how I'll make money. I'd be great. I'll eat pizza all day. I'm kidding. It's not about the money. If it was about the money, I would trade my own accounts. It's about educating you guys. So the fact that I get to answer questions every day, it's like a joy. I wish I had all the time in the world to answer the questions, but there are so many freaking questions and so many of them are repetitive. So I like this. Thanks in advance for the forward option advice yesterday. You actually made a nice profit this morning. Yes. So some people, when I have time, I answer questions. It's funny how I was saying that. When I have time, I want to answer everybody's questions. But when you ask me questions, you're not specific, or you say, hey, buddy, can I ask you a question? Dude, I don't even have time to answer. Can you ask me a question? Just ask me the freaking question. Thank you so much, man. Yes, so forward options, I said it might spike a little. You might want to double down. He planned ahead. When it spiked on open, boom, he was out. He didn't have to worry about it. Now, Ford could have went higher. I think Ford's going to $20 in the next couple of months. $20, 33% gain. However, all right, doesn't mean it's going there today. And Ford went to like $14 and probably like 70 cents. I don't know. It was down 69 cents. So, yeah, good entry point for long term. All right, thank you, everybody. Have a great night.